So there's a lot of opportunities. There are traditional names, nothing wrong with those. You have Hershey, American Express, GIS, General Mills. I talk about it in one of the videos. Who else out there? Microsoft, big play, very traditional but powerful stock right now. Who else is out there? I will always have on the table Visa, MasterCard. There's a bunch of names. Now, let's take a look and find a few of the jewels in Europe. The first one I want to share with everyone, not only the war room, but obviously the Marketers Traders Daily audience, because I think it's relevant right now that we take action. Remember, not taking action is dangerous. That's what it is. So if you don't have a trading account, if you don't have an investing account, it's time. Just so you know, and I will never get tired of repeating this information, in March, in Japan, 500,000 new trading and investing accounts were opened. 500,000. That's 500,000. That's a gargantuan number of new accounts. I'm still wondering how many new accounts were opened at Ameritrade, Schwab's. I think there's a way to get that information, and I will totally get it. Guys, for the first time, there's a historical opportunity. If the GFC, Great Financial Crisis, 2008, 2009 was an opportunity, this is the mother of all the opportunities. There's a lot of discussion. I'm not going to get into what happened, Black Swan, White Swan. We knew Corona was coming, so it's not possible to call it Black Swan. Forget about it. That's a White Swan. I'm not going to go into details. That's it. Period. Now, it happened. The number of unemployed individuals is just skyrocketing everywhere. Not only in the U.S. Forget about NFP, non-farm payroll. Welfare in Spain, and the European Central Bank is actually deciding to come up. They're working, or they will consider it. It's coming. European welfare. That's on the table. This is not a joke. But the most important, the idea that I want to convey during this video is you need to look around. Please, don't just buy something. Oh, Microsoft, let's go do that. That's great. It's a great name. And there's a lot of value in that company. Disney, yeah, let's load the boat. No. If it's trading at $100 and it was trading at $200, retail traders, Main Street, they think, oh, it's a cheaper price. That's just stupid. It's plain stupid. Don't do it. Look at the valuation. And today, I'm going to show you one of the fundamental metrics I use to allocate risk. That means, plain English, I use that to guide me and saying, okay, let's buy this particular stock. Is that all right? Okay, let's do it. Looking at Repsol, REP, that's the IBEX 35 symbol. Remember, REPYY. I'll double check now with you guys. It's the symbol for the US version. Couple things. We're going to look at Hawkeye Traders. I use my Hawkeye Traders. All of you guys know that I developed and live and die to work with price rotation. I'm not going to talk much about it now. I'm going to offer you guys another tactic that I use. What is my strategy? My strategy right now, I want to buy Repsol. But I can't buy just go in and buy $10,000 worth of Repsol, and that's it. No. I need to know exactly what will be my worst case. What happened, what is happening, and what most likely will take place in the next 2-3 years. That's the minimum return in time. I want my money back, and I want results. I want a yield on my money in the next 24 and 36 months. Okay? Now, this is Repsol. This is exactly how things went down for this company. There's evidence, bearish trend line. You don't need to have a PhD to do this. Just a little bit. You just need a little bit of attention. That's your trend line. So 1, 2, 3, 4, and that's it. Ciao. Ciao, bello. That was it for that particular stock. What happened is this company, for whatever reason, was not performing well. It had a couple of opportunities where we have a demand that goes all the way back to July 2002. This is the demand. You don't need to figure this out. It was already in front of your face. In front of your face. That's what it was. This is the demand. To the upside, you have the offer. And the offer will have what we call the reaction. Example, back 2000, this is 2005, all the way to June 2008. Look at this. And again, this is not something that I need to just explain over and over again. You look at it and you can see it happen. When you have the selling entries, have a sell, have a sell, have a sell, and have a sell, 1, 2, 3, 4, there's a reaction and there's a reason. Interbank institutions, they create the offer and the demand. You guys call it, and that's fine up to this point, you guys call it resistance and support. Far from reality. These are levels where the institutions, they start unloading their shares. They already made money. Example, look at this. Hey, look at this. Right here. This level. They bought at 12 euros. I think this is a quotation in euros. 12 euros. And they held onto those shares. And at this point, they sold for 139%. That took them July 2002 all the way to September 2005. So about 2 years, almost, let's say 3 years. The institutions, the big boys, the masters of the universe, whether you like it or not, they loaded the boat after the dot-com bubble, sometime the first half of 2002. And after that, they waited about 2-3 years. Do you remember what I said at the beginning? I want to see a yield on my money 24 to 36 months. It's not that I want that. I have seen this happening over and over again. That's the way it works for the big boys. We're just following the money, the smart money. All right? Now, once they unload the Repsol shares, they create evidence. Think about this as a trail. Let's say you want to go to the mountain. You can explore, take extra risk, or you can follow previous individuals that did it before you and find their look at their footsteps. So you make your life, it just makes your life easier. That's all you have to do. So there's the offer created. They sold. See what happened. Then we have a small pullback. Again, goes back. Not a coincidence. There's another sell-off. Again, pullback, continuation, and here we go. The beginning of the end. Is a little bit above previous offer. Retest of this and the second area. It goes down. And finally, creating a pattern, a technical pattern. A couple tops, but what we'll look at is head and shoulders. There's a head, there's a shoulders, and this is the neck, the balance of that formation. Once it's broken, goodbye. So on the second, we have again a retest. 1, 2, 3, 4 times. Offer, reaction, decision-making point, final decision-making point, and ciao. Goodbye. That's it for that company. From $27, after a while, we have a multi-low, multi-demand level where buyers were interested one more time. That was at €20.49. Broke down, new low. Again, not a surprise. Where exactly did the price land it? Did the price land? It's in front of you, in your face again. The demand that was created by that institutional players, those institutional players created at this level. Look at it. July 2002. The low, 10 euros, 15 cents. Demand created. Not a surprise. The low in March 2009 went all the way to 11 euros, 24 cents. Around the area. Look at it right there. That's your demand. What happens next? Lows in place. Look for the demand. Prices rushed to the upside. See that I'm taking my time to share with you. It's not just a video for you to like the video. Don't like the video, please. I don't need your likes. Actually, I'm turning off the comments. Your comments, what's the point? I don't need a comment. We need you guys. Market Traders Daily is taking the time to build this content libraries with premium analysis for you guys to take action, not to say how much you like us, blah, 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 give us a like. No, share the video if you want, so someone can get this information and look for into their best interests. We don't need more stupid people. We don't need more broke people. We don't need people using welfare. That's not the point. That's not how society progresses. Far from it. Free money is dangerous. There's nothing wrong with helping those in need, don't get me wrong, but it's far from actually getting free money. This is a totally different situation. Because when you get free money, what's the purpose of working? Okay? So focus on learning the value of these videos. Focus on getting the information that you need to take action. Make the decision to change your life. Make the decision not to be a victim anymore. Oh, but a lot of people, Jose Ricardo, a lot of people, they lose money in the stock market. I bet you they were not following this deep and this structure analysis. They were just buying Netflix. And I bet you they were buying Netflix at the high, because that's what Main Street does, right? That's what retail traders love to do. They buy high so they can sell low. That's what they do. They do everything in the other way around. But not you. You're listening. You're open. You're taking notes. And you're going to take action. All right? Now, as I said, we have the demand. We already learned where the institutional money created the offer. 1, 2, 3, 4. Head and shoulders, broke that neckline, go down. It goes down all the way to retest previous demand back in 2002, 2009. Great financial crisis. Now we continue. It goes up, not too far actually. Repsol is unable, lacks the power to go and retest the offer at this level. That's fine. It creates a new offer. Retest, offer created, retest, reaction, and then it goes down. Reasons, who knows? Who cares? This is our entry selling. It retested. You have, look at this, 1, 2, broke. Again, no surprises. What is the price doing? Retesting previous demand. Demand, reaction, decision-making point. Again, I'm not going to explain this. You can see exactly what happened. Where is it now? At that level, January, February 2016. Once again. There you go. Demand, reaction, decision-making point, and here we go. One more time. Where did it end? It not too far from the previous offer. And now, right now, the present, what it is, this level. This is the new demand. Demand has been broken, totally filled. What this means, ladies and gentlemen, this is a cycle. Repsol, R-E-P, ticker symbol in Madrid, IBEX 35, has completed a cycle. But there's a cycle that it has to fulfill. Where is Repsol going? The future of Repsol, and why I have tremendous interest in this company. Let me show you where's the cycle. And if you think it's a joke, wait for this. Let's take a look. Let me show you the first cycle, and you will be surprised. See, let me take the brush. Here's the cycle. Demand, remember? Cycle number 1. In your face. Cycle number 2. Completed. Cycle number 3. Completed. 1 second. Let me bring. Hey, look at this. Cycle number 4. Completed. I have a question. Do you think there is a 5th or cycle number 5 coming up? What do you think? It's in your face. It's in your face. Now, the only question, maybe the only second question that we need to answer is how low may Repsol, ticker symbol REP, may go? That's the only tricky question that I have to answer for you. But if you're listening, if you're paying attention, if you're taking notes, this is so simple, guys, please. It's in your face. Now, let's remove all drawings and let's talk about the cycle that I am convinced, based on the evidence of the last 18 years. 18 years. Just write this down. 18 years of data. Thanks to the chart. That's all you need, okay? It's right there in front of you. Simple as it is. So you take that information and you have 18 years of data. Now, what is the cycle that it needs to complete? Yes, the offer cycle. Now, this can be in the following. Let me take the brush. Okay, so you have this and you have this one. So price, now the question is how low it may go. But the price has to do this. There's one cycle, the buy cycle, or it can be extended and come all the way to $17. So this is how I have 2 targets. Based on the expectation that Repsol has to fulfill the cycle, the institutional cycle that created the offer, one offer, second offer, one offer at 17 euros 40 cents, the second offer at 15 euros 22 cents or 20 cents, it doesn't matter. It created a new demand. This is the demand. It's around so far $8 and $7. It might drop. Yes, it might drop. There's risk. Yes, there's risk, but it's measured risk. At all time, we're measuring a risk. Now we know how far. I know I can make, looking at this company from this level, there's some expectation I can make 100% of my money. Or if it goes really well for Repsol, they structure themselves, I'm looking at least 130% in the next, how long? 24 to 36 months. Simple, guys. Now, let's go to and answer the question. Let's remove all drawings one more time. How low? So this is the new offer. Don't be surprised, because I won't be surprised if there's a retest of the offer. So I said this is the offer. Price may just come down at some point, go sideways, and then retest. Then you have what it's called technical analysis 101, double bottom. So with that information, we can play. Hey, but Jose Ricardo, things are really bad. No one is working. Hey guys, look. All these companies, they have made decisions to ensure their future. In Spain, they have a system. It's not called layoff. They have a special system in conjunction with the government where employees, they get money. So that serves in the short term. A lot may happen. The system's a little bit different in Europe. Still, it's a good opportunity. Now, what I suggest, we're trading around €8.35. Those of you in Europe, I don't advise to trade the CFDs, mainly because I see there's a weak floor and we may retest this 585. So watch out. Pay attention to what you're doing. Buy the cash position. For those of you in the US, I will just jump to take a look and share what is the metric that I'm looking that helps me, the valuation, to understand what exactly I'm paying for this company. Okay? Now, if you're buying at this level in euros, 835, due to the nature of the landscape, how everything is playing out in Europe, I will have to share with you guys that I'm looking at least 26 initially. I feel comfortable with a 53% risk. This is the risk if you are looking to go long. What I suggest as well, I'm just going to share with you everything I do. If I have 10,000 euros, I don't just throw that money into a stock. I divide that in two tranches. 1, 2, I can do 3 if I want. Right now, I strongly advise to avoid stop losses. Anything can happen. There's a lot of back and forth. Sellers can just come down. Hedge funds can come down, push the stock to $4. Take out all the stops and then just continue higher and you're out. And you take a hit, take a loss. Avoid that. Manage your risk. Manage your risk by managing your money. That's what you need to do. Manage your money. Okay? And then you divide that in 3,000 and change. And then I buy today. Then next week, hey, let's say it drops. I buy a little bit more. And then in the next 3 months, I have all my money invested at different levels. Or if I have a portfolio of $50,000 or 50,000 euros, don't take 25,000 because that's 50% of your portfolio. Take $5,000. That's only 10% of your portfolio. If something goes wrong and you have a drawdown of 50%, let's say you take the $5,000, you don't listen to Jose Ricaurte. He's crazy, man, crazy. He has no experience. He built a $50 million portfolio out of luck. That's what he is. He's a crazy man. You don't listen, fine. You take 10% and right away take $5,000, 5,000 euros, and you purchase at current price. And then it drops 90%. Well, the good news is that at least you listen and you only took 10% of your 50,000 global portfolio. So you only have a drawdown or potential loss of about, let's say, 10% of portfolio. It's not that bad. Whether you take 50% of your $50,000, 50,000 euros, and then you have some serious issues. Poor risk management, poor money management. It's up to you. I'm sharing, I'm explaining step by step, taking my time. You decide what you want to do. But I bet you one thing. There are not coincidences or accidents in this life. If you use proper risk management, proper money management, you have nothing to worry. And you can let the stock do the conditions of the stock market right now, not only in the US, everywhere. Nikkei 225, DAX in Germany, FTSE 100 in the UK. Who else is out there? CAC 40 in France. They're all going through the same rough storm. So, no stop losses at least for the next 12 months. Use percentages that make sense. So if you get hit in one position or you have a floating drawdown that exceeds our estimation, again, I'm repeating, I'm using an estimation risk of 53%. I wouldn't be surprised if it goes lower. But because I use tranches all the time, and that's what we do in the war room, tranches, some people do, some people don't do it. It's fine. If it goes down, I'm happy to buy more. And I'm happy to buy more. Why? Because I have the cycle, and the cycle indicates we're looking at two levels, 15 and 17. those two targets. If you need to look at the cycle, just rewind the video, take a look at it. Now, let me just remove that, close the video. Always take a look at the site of the company. Repsol has a nice site. It's well structured as far as all the information you may find. There's a section for analysts. They share the consensus, everything. You can look at the list of buy recommendations. There's about, I think they have this is more than 20 recommendations. I'm not surprised. Ahorro Corporación, Luis Padrón, he's giving a buy. That was February. Target price $17. We probably need a newer one. I don't know if I see one that is these are the ones. I mean, it seems this is the one from Credit Suisse. Thomas Adolf, outperform. I think this is a fair one. $15, not a bad one. There's a few that are too conservative. Just exaggeration, but does make sense based on the offer and the cycle that the stock may need to close. This is from February. The one's in March. This is $14, not a bad one. Victor Peiro, GVC Gaesco Beca, Goldman Sachs have a conservative though, but makes sense. Michel de la Viña, 1350. That was on the last month. So there's a few that you can look at. Now, there's this website, whitecharts.com. It's free content. As you can see, there's a lot of free tools that you can use and come up with an idea what you want to do. Now, the number one valuation that I look is for tangible book value per share. If you use whitecharts.com, you probably need to get an upgrade access so you have an idea exactly what is that tangible book value. Why? And I'm going to end this video. Listen, guys, you need to know exactly what you're buying. So I always use the example of a house. Okay, this is the house. Okay. If you buy, it's very common to buy the blueprint. You buy before it happens, and let's say you pay $50,000. If everything goes well, they deliver on time, and you have your house. Now your house you bought in blueprint, you took some risk. Now the house is finished. This is worth right away $150,000. Okay, now let's say you are now buying the house, and they are telling you the house is worth $250,000. Now I have an issue with this. The house finished, and forget about the blueprint. Now the house finished is worth $150,000. You're asking me to pay you $100,000 more. That's a little bit too much for me, because you're asking me to pay extra value, $100,000 extra value. There's a percentage for that over the value of the house finished. If you were to ask me $180,000 in a flip, mainly, now think you pay 50, it's 150, there's $100,000 profit. You'd ask me for 180, I can say you're using 30,000 to close expenses and all that. I can live with that. That's fine, not a big deal, because the house now is worth, I'm buying a worth of 150. I can deal with that extra $30,000, but $100,000, that's a steep premium. Does it make sense? If you take this information, this structuring and everything, and then you go and you talk about stock, if Repsol is trading now at 8 euros, okay, let's talk about the American value, $9.50, for example. And then I come up with the tangible book value. And for a surprise, you tell me is $4. Okay, I can buy Repsol. Why? Simple. First, I know the tangible value. I know it has value. It's not a negative number. Second, if the tangible value is $4 and I'm trading around $9, I know that can trade at this level. That will take me down 50%. Based on what everything is happening out there in the stock market, hey guys, that's fine. Don't use the stop loss and I'm good. So I'm willing to pay for that tangible value, for the stock, knowing that the tangible value and where I can go. That's understanding my worst scenario. And that's good, guys. That's fine. That's how I do it, and it works. But if you tell me that this thing has a tangible value negative, that's a gamble. I'm still willing to take it, but that's a gamble. And I'm betting on something that has no value. Okay? Now, I wanted to share that tangible value, put it down the metrics. Always ask yourself, what is, let me bring the pencil. What is my stock tangible value? Before you do anything, when it comes to trading and investing, write down the trade. Write down what you're thinking. I know it may be some cumbersome or whatever, but it's your money. You work hard for it, so do the same. Give it some love to your money, okay? So I look at the tangible value, look exactly how much you're paying versus what is the tangible value. Know your worst case scenario. Right now, no stop losses. Let's just wait, see how the market flushes all the losers, everything. And then I'm guaranteeing you, if you follow the steps, proper risk management, proper money management, you will be super successful in investing. And the next 24, 36 months, you will have a strong portfolio with very strong returns. Remember, in stocks, you're looking at least between 7 to 9% return starting in 2021 and 2022 onwards. Thank you so much, Jose Ricaurte, for the War Room. Take care, guys.